What is going on, YouTube Nation? This is Start Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I just posted a video this Sunday for the final part 2 of 2 with the food stocks. I really wanted to cover energy transfer stock. I'll be working Monday, which is my shift, and Energy Transfer is a very interesting stock. It's a high yield dividend stock. So I'm going to do a stock analysis and dividend stock analysis. And I'm telling you, like, I'm getting ready for finals. I have a Rampage shirt on, remember the video game? So I'm going to be in rare form these next few weeks. So we'll go over this stock. We're going to go over the dividend trends. We're going to go over the revenue. And again, if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. You got to hit that notification bell because I'm pumping videos out like crazy. Let's check this stock out right now. So ET is a symbol, not ET like in the movie ET. This is Energy Transfer. It is sitting at 11.23. It has a dividend yield of 6.23%, a PE ratio of 5.93, a volume of 24.62 million. Market cap is 34.62 billion US dollars. Its year range was 766 to 1166. Day range was 1092 to 1126, and its previous close was 1104. So right here in the past 5 years has not done well against the S&P. As a dividend investor, this looks somewhat attractive because it's not jumping up against the S&P. It's not going too fast. It doesn't look like a traditional or Roth IRA type of stock because, obviously my philosophy with having a traditional or Roth IRA with stocks are, one, they're increasing their price per share. Two, they're keeping up with the S&P or beating the S&P. And three, they're increasing their dividends. If they're not doing that, I wouldn't consider that a traditional and or Roth IRA stock. So let's check these guys out with Energy Transfer. So here's some interesting news with these guys. First of all, Energy Transfer and Enable Midstream Partners completed their previously announced merger in which ET acquired ENBL, effective with the opening of the market on December 3rd, 2021. ENBL's common stock previously listed on the NYSE under the symbol ENBL, discontinued trading. That's one thing that's very interesting with these guys. So Energy Transfer is one of the largest and most diversified midstream energy companies in North America, with approximately 120,000 miles of pipelines and associated energy infrastructure across 41 states, transporting the oil and gas products that make our lives possible. The $522 million they spent to maintain and improve their assets, and again, the miles and 30% of our nation's and natural gas, crude oil moved from their pipelines. So that's one thing that's very important, and what makes these guys a very in-demand company. So that's one thing that's very attractive. So there's a few more things we need to look into. So gas is important. People need gas, natural gas. So that's one thing that's important with these guys. So Energy Transfer is the best positioned company in our industry with an unparalleled energy portfolio and strong financial position that enables us to fund growth projects, provide exceptional service to our customers, and maximize our value to unit holders. So, this nitty and gritty is great, but let's look at a few other things. Right here, this is what's important. Crude, natural gas liquids, natural gas storage, fractionator, terminals, processing, treating. There's some of their stuff. So look at how far this has expanded. Just look at their map and distribution. So it's in Canada. If you look right here, there's some Canada assets. And look at the direction that they're headed, and they're just, wow. This is a well-diversified map. And they serve a lot of customers, and they, like they said, 120,000. So that's one thing that's very intricate and very interesting with Energy Transfer. So let's jump to their revenue. So here's a few things to look into revenue wise. So 2014, this is in millions US dollars, 55,691. 2015, 36,000. 2016, 31,000. 2017, 40,000. 2018, 54,000, 2020, 38,954. So let's look a little bit more into them. The revenue quarterly in March 2021 was 17 billion. The net income was 3.28 billion. Diluted EPS 1.21. Net profit margin 19.33%. Operating income 4.07 billion. And cost of revenue 11.77 billion. June, it's up 15.1 billion, 105.79%. Net income 6.25 million. Diluted EPS 0.02. Net profit margins a little bit down. Operating income is 1.6 billion. Net change in cash negative 73 million. September revenue has increased 67.39%. Net income has went up. Diluted EPS, net profit margin, operating income, so that's promising. What about December? 18.66 billion, so 85.94%. It's been up. Net income 9.20 million. Diluted EPS, net profit margin 4.93%. It was down 2.76%. Operating income 1.7 billion. It was 19.99%. Net change in cash 23 million. Cost of revenue went up. So there's a few other things that we need to look into. And you know what that is. It's the dividend history. So here's their dividend history. So 2018, it's 30 cents. 2019, it's 30 cents. 2020 is 15 cents. It went down. You can blame the pandemic. 2021, it was 15 cents. And then 2022, it was 17 cents. So the dividend yield is 6.31%. The PE ratio is 5.91. The annual dividend appears to be 70 cents. So it's sitting at 11.23. So it looks like a high yield dividend stock. So there's a few things I want to go over with these guys. One, I see a decrease in dividends. That's one thing that's a turnoff for me. Two, you have to fill out a K1 form. Now, if you saw me go on the website earlier, it said K1, so you had to fill out a K1 form. K1s are a headache. I had an accountant do that for me. That's the other thing that's important. So there's other things that are with these guys. You know, the revenue trends were kind of a turnoff for me. I did own these guys. I did sell them, to be honest with you. I just don't like the trends, and that's one thing that was a major turnoff. So what I did is I sold it. I threw it into, I'm pretty sure real estate investment trust like Arbor Realty Trust was increase their dividend. So I like dividend hikes. This is what turned me off, is it was stagnant from 2018 to 2020, and there was no hike in dividend, and they decreased their dividend. It's in the PE ratio is kind of low. Dividend yield is 6.31%. So, you know, if it ever goes above 30 cents, and I see a hike above 30 cents because their revenue is going up, yes, I would consider it. But they're basically playing catch up. And if they were increasing their dividend from 2018 to 2020, you know, just by studying the graphs, again, this is not financial advice for entertainment purposes, only disclaimer in the description. But if it was increasing its dividend from 2018 to 2020, I would be turned on from it. And I just did a little bit more in-depth of a dividend analysis on these guys, and I sold them. I mean, a lot of people own these type dividend stocks. They own Energy Transfer. Some people love it. It's more of a headache with K1s, and I just don't see any dividend hikes. So I'm kind of turned off by it. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dart Dividend. You guys have a good one. And I'll probably post one on Wednesday. So I'm not going to do one Tuesday. You guys take care and have a good one and be safe.